Good morning, this is Diana Sescolini, and I'm going to be talking about Chapter 10 for my ACCTGFS465 class, which is capital budgeting. So I'm just going to park myself here in the corner. Give me a second, let me get everything set up here. Get my little laser here, okay? So Chapter 10 is about capital budgeting. And when we talk about capital budgeting, we're talking about how we figure out how we buy what we call capital goods. Capital goods are assets. These are things that have useful life in excess of 1 year. So we would be talking about buildings, equipment, machinery. And so we make some actual assumptions about capital budgeting. We assume the only reason we buy this long-term asset is to increase our cash flow by efficiency and effectiveness. These are my two favorite E terms that I use. So the whole purpose of purchasing anything should be to generate you more money. That's the only reason you would take money out of your pocket and buy a new $100,000 piece of equipment if it could not generate you more revenue. And so then I want to look, and we also assume, we look at what we call the rate of returns on investment. If I have X amount of money to give out, which asset should I purchase based upon my return on my investment? And I want to look at the current inflation rate. So we assume that it's going to stay the same. Okay, so this is some of the things we're going to be looking at in this chapter. These are assumptions, things we assume that long-term assets will generate our cash flow and the rate of return and the inflation rate will remain the same. In reality, this is not true. Inflation does not remain the same. So just keep that in mind. So here are my steps to capital budgeting. And we're going to be talking, when we get down into evaluating the data, we're going to be talking about different methods, but this is just a 5-step process to figure out how do I do capital budgeting. First, I have to formulate a proposal, evaluate the data, make a decision, follow up. Once I've made the decision, I'm going to follow up to make sure that things are happening the way I expected them to happen, and if not, I'll take corrective action. So this is just a 5-step process. In reality, this same process is a decision-making process that you'd use in your everyday life. Okay? So just so you know, this is just a process. Okay, so we're going to look at each component of it here. First, we're going to talk about formulating a proposal. So I have to understand when I say a proposal, I need to look at all the costs involved. What is my startup cost? How much of my working capital is going to be committed to this proposal or this project? And what tax implications do I need to look at? A lot of people will start projects or take things on and not realize the impact of taxes, how it affects it. So these are benefits to why I budget. This is why I budget. I increase my efficiency. And remember, I said the efficient and effectiveness are my two favorite words in management. I reduce my taxable income, which then changes my tax factor benefits, okay? If my taxable income is lower, then I pay less taxes. And any proposal or any piece of equipment or asset I buy, I can take a depreciation expense. Okay, so on the next slide, we're going to look at a chart for a 5-year loan. This is annual interest payments and tax saving for a 5-year loan. So this is the amount I'm going to borrow. The interest rate is 11%, 60 months, and here's how much I'm going to pay each month. Well, my income tax rate is 28%. So basically, if I'm looking at 28% of tax rate, here are my actual tax savings on this loan. Okay? So here's my loan payment, my annual loan payment. It looks like it's 12 months, but I'm paying annually. Here's principal, here's the interest payment. So I'm basically taking 28% of my interest payment to get this, okay? Because the interest expense is the only one of these things that would be a deduction in my taxes, interest expense, okay? So it's 28% of this column gives me these numbers. So this is what I'm actually saving. So I don't want to hammer into this. I want to get into the 6 different methods of how to evaluate the data. And that will be in my next video. We'll start that on the next video.